There are definitely people here who entered this market a month ago, 3 months ago, 6 months ago, and are at a loss of about 20, 50, or 80%. And you're wondering if this whole adventure even made sense? Was investing in cryptocurrencies just some illusory, foolish idea? Because someone told you that you could make money from it, and now you almost regret that. You invested in this market, that you bought any altcoins, that you bought Ethereum or maybe even Bitcoin, which dropped by 30%, and thus you simply believe that it all made no sense. But on the other hand, well, it would be nice to put yourself in the perspective of a warrior really in his shoes and say, okay, it happened, the milk has been spilled, there are losses in the portfolio, realized or not. I lost on leverage. Maybe I lost funds because I played too much, bought some strange projects, wanted to get rich quickly, bought altcoins from distant positions. I wasn't actively playing it, just waiting for something to happen. And finally, the market absurdly and bluntly verified these plans of mine, and with that, the portfolio is even 80% down, but okay, I accept it. I decided that someone can handle it, and that's why I'm watching this material. That's why I simply believe that instead of having this victim mentality here, it's much better to adopt a rather bold stance in terms of assumptions and a strategy that we can once again validate and work through together, and which will ensure that even very large losses can still be recovered. And of course, this can happen in a relatively short time because the cryptocurrency market is characterized by the simple fact that the assets of one or the other. In the crypto market, it simply allows us to, for example, in 5 months, recover 200%, earn 200%, or recover, for instance, 70% or 60% of losses. This means that it forgives mistakes, but only for those people. The market forgives those who truly don't give up, who don't claim after 2 months that it's not for them or it's foolish. I got out right at the peak because that's usually how it is. We enter when everything is rising, the market is buzzing, and we have a much greater chance of losing money and a significantly smaller advantage compared to those who have been here for a year, 2, or 3 and play this market cycle by cycle, or at least got interested in the topic. When cryptocurrencies were cheap, I can see it in myself and in the communities I lead that when I started some projects in January 2023, the people who were involved in these joint activities were really very aware. These were people who bought Bitcoin at $20,000. Often, these were people from the previous bull market or some new people who saw that cryptocurrencies were cheap and that now is the time to buy them. So if you entered this market some time ago, half a year ago, a quarter ago, between October and January, for example, then you are probably in the worst situation imaginable in this cycle. And that's totally normal because that's how it should be. The market does not forgive those who are simply not humble, who have inflated egos and believe that they are entitled to some earnings and they should simply make a lot of money from this market despite not having any competitive advantages. Having no experience in investing, they have sticky fingers for straightforward ideas in those which seem, at first glance, not very eloquent by nature, and thus, to such people, they seem very smart precisely because they buy an altcoin, which is number 1756, and just because Tim says something cool is going to happen. I'm betting on it making 10 or 20 times the profit, and I have, mind you, 70% of my capital in it. Because I believe in this project. You have a tiny chance that this project will explode, that this project will deliver, that this project will survive for a period during which you will be able to cash out, and that this project is actually a powerhouse in this niche and not just another project in the series. So, for things are immediately against it, but many think it's a great idea. So the milk has been spilled, of course. We have losses in the portfolio. There is a very strong correction, which also occurred in previous cycles. But we assumed that Ethereum, regardless of Bitcoin or altcoins, could move here because it was deceptive. The assumption was that Bitcoin in January or February should give back a bit of its dominance to the rest of the market, and thus a correction in Bitcoin would be justified. Because here, in those previous corrections, we could have dropped 20 to 30%, and that is exactly what happened. But we assumed that at least part of that dominance would not occur. It would be given to altcoins and Ethereum, which would cause at least a slow flow of capital and migration. And it would start in alt season, which probably in this cycle, when it comes to the final post-halving year, will be a bit later. But it's hard for it to happen like that. You need to have a plan B and face what happened instead of burying your head in the sand. That's why I invite you to this material. If you appreciate this type of content, subscribe to the channel, give a thumbs up, and write in the comments what you'd like the next material to be about. Of course, I read them and continuously aggregate this knowledge. I strive to prepare the best possible materials for you. So there are currently 3 in March, in mid-March of the year 25. Any chances left to profit in the cryptocurrency market? Because it seems to us that there aren't any. So everything has gone to hell, as they say. The dog proverbially touched it with its anatomy, and indeed nothing will come of it. So if you're watching this, the truth is that you're probably in the red and wondering what to do next. So the question is, what steps should be taken now to ultimately profit from investing in cryptocurrencies despite the current loss? And indeed, I will approach this topic quite strategically. I will tell you what the scenarios are, what options you have, what might happen, how to approach the matter, how to navigate this very difficult cycle further, because it be admitted this is probably the most difficult cycle in which I have participated. There is a lot of confusion, a lot of manipulation, the most people in history and the smallest percentage returns from individual investments, and so on and so on. A ton of projects, it's hard to choose something. So indeed, we have a challenging task, and the El Dorado will probably end in the next 2 years. Bitcoin itself will probably still triple, maybe quadruple, in the next cycle, but everything will flatten out in terms of return rates, and we have the last year, I think, to still make some profit from it and use the current correction to our advantage rather than giving up. So listen, the truth is, 2025 was supposed to be perfect. So far, it's completely the opposite. This first quarter is surprising from every angle. Trump is making things difficult. Manipulations here, some deep-seek. Declines in the traditional stock market. Interest rates that are not being lowered. There are indeed a few key things missing that would make things better. Ethereum is doing terribly, and on top of all this year just doesn't deliver in any category. For now, everything is the opposite, even contrary to historical data that appeared somewhere before, except for Bitcoin only. Many of you are slowly starting to feel that all of this is pointless, that there's no end. But the truth is that last year's the comments were similar as well. I was even criticized several times for allegedly getting someone into the cryptocurrency market, forcing them to buy cryptocurrencies when it's clear that everyone makes their own decisions. And it's not, listen, my fault that it just so happened that a bad YouTube algorithm made you see my videos. You got caught up in it. Everyone has their own brain. Do what you want. Watch whoever you want. I don't have bad intentions. I want to make as much money as possible with. You can earn as much as possible on this market. It doesn't always work out, but you can see for yourselves. I also constantly risk my own funds. So it's not that I'm just a theorist, only that someone. There is Merrick Stiller talking on YouTube about cryptocurrencies because he makes money from referral links. Of course I do. Of course, I also make money from mentoring. No one is hiding that. It's another branch of business, but I actively engage in this market myself and invest my own funds here. So that speaks for itself. I buy the same things I show on Telegram or YouTube, and you can clearly see how everything has looked over the last 2 to 3 years. And it looks good. And I'm still in the positive, because even though there's currently a 50 to 70% correction on Ether, over 30% on Bitcoin doesn't mean that all my profits are wiped out when I have over 1/3 of my portfolio in Bitcoin bought at $22,000, and that Ether is at 0. Now I have an average of around 1900, so some of those longs are in the negative. Now also the recent ones, but earlier you see what was happening. You saw it. Those who have been with me for half a year, since October, November, December, we achieved at the peak a result 3.5 times higher than the return of just Bitcoin, as the table shows, as the longs triggered every week after Black Monday, which was in August, after the whole situation with the Japanese yen. So really, the cryptocurrency market has this characteristic that it's easy for someone to judge or claim that it doesn't make sense based on 1 week, 2, 3 months, for 7 weeks we've had a correction. Okay, now there's a trend that these altcoin enthusiasts are no good. Yes, but earlier you were kissing my feet in December for making you money by 200 to 400% in a few months and everything was great. Yes, everyone was writing different things, so the fact that we part bought altcoins too quickly, that's true, I admit it. I'm talking about it publicly and we're working through these topics now, so that such a situation doesn't happen again. So if someone thinks that this channel is pointless, that I'm not delivering, and not allowing you to earn in this cycle, feel free, the road is open. Go ahead and watch other YouTubers who are now playing games instead of just somewhere, actually facing the challenge and figuring out every day how to play it all well now. Now you can play it well. Well, you know, it's easy to sit down in an armchair, grab a beer in hand and play the game. Oh, great idea. So at the very bottom of the correction, where how we arrange our movements and our mindset can really weigh on our future fate during this bull market. So choose your fans and idols, but it is what it is. Many people also lost a lot of money on leverage in this cycle. The liquidations were huge. Here are a few examples from the latest news. Several $100 million to over $1 billion in liquidations. So many people were realizing losses. Some didn't realize them either, but those who are mentally stronger are holding on to their positions. I'm not selling anything they are buying. I'm just waiting patiently. Time is on our side as long as the cycle lasts, until the third quarter, fourth, nothing significant has happened. The crypto market has often shown that it can serve us within a month. A 100% increase in the entire cryptocurrency market, which means a 50% increase. So anything can happen. Yes, if your head is full of dreams, so I hope that you'll just be able to survive this period with me. If it's really exhausting you, if you're having mental issues, if you can't handle it, then this isn't for you. This isn't like investing in an ETF on the S&P or in gold, where the volatility is minimal. even though gold has made a 15% gain this year, which I'm very pleased with. But still, I think it's not for you if you're very worried about what's happening with your money. Investing isn't for everyone, and everyone should try, because that's what life is about. To secure your money, to hedge it against inflation, which simply eats away our funds year over year through indexation. But still, not everyone always succeeds. Choose less risky assets. It's better to just break even with inflation. It's better to earn a few percent annually than to lose funds. If someone can't handle how the cryptocurrency market simply devours them from the inside, they shouldn't enter here. It's like a raging river in some kind of water park, you know. Well, this is something that is an asset, one of the most risky in the world. If not the most, especially altcoins, so it's clear that it reflects periodically. There are 1 or 2 months in a year, sometimes 3. That's how it was last year when altcoins outperformed Bitcoin. Firstly, and secondly, they offered much higher returns on investment. But when it comes to the long term, Bitcoin generally seems to be a better alternative because it allows us to earn more often and over a much broader time range. And secondly, it is much safer and we practically don't have to do anything. But for those who want to actively develop the market with me, what do? I explain what the drawbacks are, what the advantages are, what the assumptions are here, so everyone can choose whether such a strategy is for them or not. But you have to be savvy. You have to know how to manage finances and not cry when a child bumps their head on the table. But okay, getting back to the topic, here the market data indeed confirms that investors are capitulating, giving up. Now we see decreasing volumes on cryptocurrency exchanges. We see continuously falling prices. This signals trader exhaustion and a weakening market momentum. Since the peak in February, when trading volume reached $440 billion, it has dropped by 63% to much lower levels of $163 billion as of March 12th. And the analytics firm Sentiment has noted that consistent declines in volumes, even with slight price rebounds, suggest decreasing investor enthusiasm. That's just how it is. Additionally, trader behavior indicates exhaustion, a sense of hopelessness, and capitulation after further declines in the last 2 weeks. Since beginning February, cryptocurrency market capitalization has dropped by 25%, losing $900 billion. And in the last 10 days, the market has lost another 15%, due to concerns about a recession in the US and tensions in global trade. Alright, so what should we do in this situation? What options do we have left? How can we organize all these moves so that it just makes any real sense? So the truth is that this is a dilemma that many of us face. We are now standing like the hero of this popular internet meme that sell because it will get even worse and buy back cheaper at the bottom, or hold. I'll share my approach to the topic with you, but first, let's describe the 2 exact scenarios. The first scenario is for people who just want to quit and exit this market. You press the red sell button. Fear takes over. You sell what you had. Maybe you've already lost 30, maybe 50%, maybe more. In your mind, there's one thought: sell now, buy back cheaper, sell now, to protect yourself from further declines, or I'll exit the market before it completely crashes and collapses. I've often heard from viewers, from people who watch me, or from friends that, Merrick, there's some kind of correction happening. China is banning, for example, cryptocurrency mining. Nothing will come of it. Crypto is going to the grave. Evacuation, not an emergency. We make a move and we're gone. We don't want to have these cryptocurrencies. Is that okay? Well, not necessarily. What happens next? The market continues to fall. Maybe it breathes a sigh of relief. Do you think you made the right decision? You tell yourself deep down, oh, now I'm waiting for the perfect moment to just jump back on the train. If you actually manage to buy back your cryptocurrencies cheaper, I congratulate you. You probably don't belong to the 5 or 10% of investors who actually succeed in doing that. Realistically, tangibly. However, I guarantee you that if you don't have the right experience, you simply won't succeed. You're just participating in a lottery. You might hit it, or you might not. You exit the market after the biggest drops because the bottom doesn't come when you expect it. The market might pull back more, but suddenly it starts to rebound. In that time frame, you won't buy those crypto because you assume that it will drop even more. Prices are rising, and you're waiting, telling yourself, okay, there will be another correction. It will come back, it will pull back soon. And you watch as prices keep going higher and higher. Eventually, you panic, jump back in at the peak, and buy cryptocurrencies at a higher price than you sold them, and you waste time. You lose capital, you lose energy, you lose drive, you lose faith in yourself because you think you're an idiot for doing it again. That's just how the story ends for those who try to catch the bottom. You might think you'll be smarter than the market, but it's easiest to just wait even. If you're at a 50% loss, you can still wait. And probably the market, if you have good tokens, will come back into favor sooner or later. The market has a life of its own. When the crowd of capitulating traders hands over their coins to institutions at discounts to more experienced colleagues in the private sector, just like real estate was occupied in the PRL for next to nothing. Now during the correction, private investors are buying back bad altcoins from inexperienced Poles who here are investing in cryptocurrencies. Polish investors are simply exiting in a panic. I laugh. It's like this all over the world. Bad investors are buying it back from us at a loss, and then they earn hundreds of percent because they had the info. So it's them, the bad ones, who are grabbing the best prices. And question is, was it worth giving in to emotions? Yes. On the other hand, if you thought that investing was so simple and all you needed was to hold on to losing tokens, it's not quite like that. Of course, it might happen that time will play a crucial role, but there are no shortcuts in investing. Sometimes you really have to make very difficult decisions and actually come to terms with a loss. Because it's not always the case that holding a position, no matter what, is a universal solution. Yes, hodling makes sense if the asset has solid fundamentals and is in a bear market, the whole market. But if the declines are due to poor project decisions, structural problems, or when the team abandons the project, then holding such a position can be a financial disaster. What are some examples? There are plenty, starting with the traditional market. For example, Kodak, once a giant in the photography industry. You all remember everyone wanted to have a Kodak camera back in the 90s or the 2000s. This is a classic example of companies that did not adapt to changing market reality. For decades, they dominated the production of photographic film, but they ignored the digital revolution, even though it was their engineers who invented the first digital camera in '75, while their competitors, like Sony or Canon, completely surpassed them. Kodak has been losing value for years. Investors who held onto shares hoping for a rebound instead of selling and moving their capital elsewhere watched as the company declared bankruptcy in 2012. This is an example of how they held on stubbornly in the case of a company with no future, or analogous projects without a future, which clearly no longer makes sense, can lead to a total loss of investment. Moving on. Another example is Nokia, once the undisputed leader in the phone market of cell phones, fell victim to its own stagnation and lack of innovation in the 90s and early 2000s. It dominated the industry but neglected growth of smartphones. When Apple introduced the iPhone in 2007 and Google released Android, Nokia stubbornly clung to its own outdated Symbian system, losing the market to modern and more intuitive devices from competitors. Nokia's shares fell over the years. Investors who were hoping for a rebound lost most of their capital when the company sold its mobile division to Microsoft in 2014 for a fraction of its former value. Alright, these are examples of companies from the traditional market. And what are the examples in crypto? Well, there are plenty of those. For example, this picture is a snapshot from December 2017, which was the peak of the bull market. We see the top 30 cryptocurrencies in terms of market capitalization, names that at that time were considered solid projects, which might not be familiar to you, but where are they today? Where do we see them? Have the trends changed, or have they weakened? Many of these tokens simply no longer exist, or they have over a 90% drop in market cap value compared to back then at the peak many years ago. They will never return to their previous valuations because not every cryptocurrency returns to its high. In 2017, people were buying these coins in euphoria. Some even haven't sold them to this day. What was the effect? The effect was that capital was frozen in dead projects for years and not even returned to their previous values. For example, take a look at those tokens ranked from 25 to 38. Do you know these projects? It's probably not BNB or Dogecoin. Okay, but the rest of the coins are no longer on the market or they are unknown, and the people who held those coins at a loss will never recover their money. That's the truth, especially considering how much time has passed since then, and nothing like that has happened. With each passing month, the chance decreases. So the decision to sell your cryptocurrencies that are at a loss is one of the toughest decisions an investor faces, because publicly, and maybe not publicly, but rather bluntly to oneself, publicly, you privately admit that you were wrong, that you didn't have the right judgment, that you were mistaken, that okay, it might prevent further losses, but with the other hand, what if we sell at the very bottom and realize a loss before the trend changes? Such thoughts constantly swirl and appear in our minds. So, let's take a strategic look at the pros and cons of this strategy and how to approach it wisely. So firstly, a definite advantage would be limiting further losses if the project is indeed losing fundamental value. Selling can protect against the total loss of capital. So for example, investors who sold Luna in the early days of USD lost a lot, but they saved themselves from a loss of around 99%. And the problem is only whether you can assess the project well. Fundamentally, because that's a completely different topic and you need to approach each token individually. Another advantage of selling at a loss is the ability to transfer capital to a better place that could potentially recover those losses. This is something that often just comes up when it comes to such ideas, and it's often not a bad idea if we do it correctly. Because holding a falling asset is frozen capital that could be working elsewhere or simply be safe in fiat currencies. And instead of waiting for a miracle, you can move funds to a safer crypto. which actually has the potential to rebound. But here I also see one problem, because you need to know, have information or a strong conviction, an objective one, that the project you're investing funds in actually has the potential for growth. Alter projects. Gloves every week or two, because it doesn't make sense. You're not giving yourself a chance in that time frame for something to grow. If something seriously doesn't see potential, then do it. Perhaps I won't force you, and I can't, to patiently stick to only what you have. Make changes if you think it's right, but not too often, because that's foolish, because you might miss a breakout, you might miss a good moment. It's best, seriously statistically, to have from 8 to 12 tokens if you have altcoins, and at most make changes with them and rotate them, and have altcoins periodically, meaning sell during the accumulation phase, and simply sell them off in the moment of the peak, the bull market, the highs, and the euphoria phase, where we simply then convert the cash from those altcoins to USDT, to Bitcoin, or simply withdraw from the market altogether. We buy assets like gold, real estate, ETFs, or whatever else, or reward ourselves privately, for example, with 10% of our investment. That's also an idea. For good decisions that resulted from our actions, we can also reward ourselves partially and cash out a bit, go on a trip. Then your brain will also know, okay, I had a good time because I made good decisions. It was worth waiting patiently. It was worth doing something. It nicely engages our brain cells, those brain cells, to make wise, daring decisions that often require patience and reserves of really energetic reserves. So holding a falling asset is generally frozen capital. It could be working elsewhere or simply be safer in shelters, and instead of waiting for a miracle, you can move funds to a safer crypto, which actually has the potential to rebound. But here I also see one problem. You need to know that this project simply has the potential for growth, because you could make a fatal mistake if you sell a token at a loss and move the funds to another coin that drops another 50%. So such a dilemma can simply be solved by moving your money from alts to Bitcoin, because Bitcoin is more likely to survive in the market long term and earn. And moving money from alts to Ethereum also doesn't seem like a bad idea. But the decision is yours. Alright, now the downsides of selling at a loss. Let's move on. The biggest downside is that you simply lose your capital irretrievably. That instead of an unrealized loss, you have a realized loss. It's just something that has already happened. And as I mentioned, there's always the risk of selling just before a rebound. Because from a psychological point of view, greatest fear appears at perfect bottom. And that's when the most people sell. And fear is the strongest emotion in the market. It is much more palpable than euphoria. Unfortunately, when emotions take over, investors stop acting rationally and make the worst mistakes. And it happens that one might misjudge a project from a fundamental perspective and sell a well-performing cryptocurrency, some DeFi token with great tokenomics and consistently generates high revenues, but even though the price dropped by 60%, such coins can fundamentally defend themselves in the long term. Another example is an anecdote from the traditional market, Amazon. In 2001, it fell by 90%, but it bounced back, and today it is a giant. Selling at that time would have been a mistake, just because something was dropping significantly and we didn't want to lose everything in the end. Yet, it's a titan among the largest companies in the world. Look at how this drop appears from a long-term perspective. It's invisible on this chart because the market capitalization has grown so much, and selling at a loss in 2001 was completely unprofitable because the company is valued multiple times higher, but it's a rare case that can still happen. Example in crypto market. Ondo, from the December peak, the price dropped by 60%. I have a bit in my portfolio, but I do have some. Am I worried about the correction? No. This is one of the biggest players in the market of tokenized treasury bonds. This project isn't going anywhere now. Don't think so. It holds ground. I'm not selling it at a loss, and that's that. And if we are following scenario number 1, then how? To sell wisely so you don't regret it? How does it look? How should it be tested? Listen up. First, set the selling rules before you enter a position. It's important to write this down. An example would be selling if I lose 15% or if the fundamentals of the project collapse. That's the hypothesis, and we stick to it. Another example could be a strategy like even if the asset drops by 50%, I don't sell. I wait for higher valuations because I fundamentally believe in the project and add more during downturns with additional funds. Secondly, don't sell in panic. Analyze the reasons for the declines, because if the entire market is dropping but the fundamentals are okay, it's worth waiting it out. If it's a fundamental change, it's better to sell and get out. Thirdly, use stop losses on the spot. It's not only on leverage you can set this up, because if your coin on the spot is at a few percent profit or a dozen or several dozen, set a stop loss at the entry point. In the event of a major market crash on Bybit, it will sell those tokens for you. You will be at a loss. You will break even at the entry price. But this only works when from the start, from taking the position, we are a few percent in profit. However, I recommend a dozen as market fluctuations are significant. If we have a 5% profit and set the stop loss at entry, the token might drop by 7%. Then, shoot up 100, we won't have the token. So let's just maintain a healthy difference between the entry and the profit. We shouldn't set the stop loss too quickly, and then we can always do DCA as well. Before setting a stop loss, if we are in the negative until the position turns positive, and set it. So in this way, you always avoid losses if the token continues its upward cycle. But keep in mind that after triggering the stop loss, the price might go up again. Sometimes how market is, it can happen, but at least you didn't lose. That's most important. In my opinion, in crypto, protecting capital is more important than just earning it. Several times you'll protect your capital, break even, but eventually, you'll simply make a profit. That's a better strategy. So to sum up, selling at a loss makes sense if the asset is fundamentally losing value, won't recover. The capital could work better elsewhere, or you want to limit the risk of further losses. You can't afford it, and selling might be a mistake if after first, the asset is solid but is only losing due to short-term volatility and market manipulation, and second, if you are selling emotionally without thinking through the situation and without any logical analysis of what is happening. Alright, so we have discussed the first scenario. So let's go back to this meme once more, because we have quite a dilemma. Our crypto is at a loss. This time, instead of selling, we decided to hold. And this is the second scenario, which is holding and patience. Because instead of panicking, you remind yourself why you are here. You are here because you believe that the crypto market won't drop to zero, that it will develop, that this is a correction currently. And you hold on stubbornly. Despite the current cycle being what it is, despite the great stagnation, you manage to understand that in the past few months, the crypto industry has changed recognition. I'm talking about regulatory issues. Crypto adoption is entering an increasingly mainstream time. Long term, it will advance through the largest institutions in the world. That's why you ignore the noise. First of all, the market is falling, but you stick to your strategy. You know capitulation is the moment when most people give in to emotions and leave the market. You buy on the dips or hold what you have. If you have a plan, you don't try to catch the peaks and troughs. You also know in the broader spectrum the market always comes back. The biggest profits go to those who manage to weather the storm, and after some time the market rebounds. Capitulation ends. Fear turns into greed. And you have your tokens and don't need to chase that train now. The worst is behind you. In short, this strategy is about others wonder when to return. You will already be there. And it's not just me. Do we have losses on altcoins now? Probably at this moment. A larger part of the market is in the same situation. Few people can be in the black on an altcoin they bought 2 or 3 months ago. And that's what most people were doing then. So generally, the market isn't spoiling anyone right now. It can give the biggest players a hard time. The best ones, because I already mentioned in the previous video, even a project. Trump's project is down by $110 million. Are they cutting their losses? Are they selling off in a panic? No, not just like that. They will choose scenario number 2 for Trump. They are holding, waiting for higher valuations, and they may soon buy again. They are averaging the price down. They can. I consider scenario number 2 to be the right one, simply because it allowed me not only to stay afloat when cryptocurrencies repeatedly brought me losses, but also let me earn in this market over the course of 8 years of investing. So the question is, if like me, you also press the hold button instead of selling off yourself, how should you play it? Yes, let me show you. Here is my strategy. The crypto market is generally characterized by the fact that in a hold strategy, the value of our portfolios fluctuates here like nowhere else. At the beginning of December, for example, look, most people probably had their portfolio ATH. For instance, on December 8th there was a peak, and now just 3 months later, you have to deal with significant losses. I had a few friends who, for example, wrote to me in December saying they were getting dangerously rich, that suddenly they just couldn't believe how much money they had. And when I look back now, it was a sign that they could have sold. I could have advised them myself and said, well, if you think so, it's probably good that you've achieved your goals and plans. But then it turned out that it wasn't entirely meant for them, and thus, those people overdid it. Alright, I once showed you a graphic that perfectly illustrates how holding in crypto really looks. I specifically say hodl, not hold, because it's meme-like. That's what some people say, and new people think that all you need to do is buy. The only thing you need to do next is wait for the asset you bought to increase in value. Well, it seems there's nothing simpler. And that's exactly how it looks, because indeed we buy Bitcoin or altcoins and wait, or optionally apply the DCA method and from time to time average our entry. But new people are not ready for what will happen along the way, because before we sell our cryptocurrencies for a profit, it is practically inevitable that their value will drop significantly several times, and we will have to wait out that worst moment. And you can see this in the lower part of this graphic, because the road to crypto wealth was never paved with roses. It was not simple. It may seem that way when we zoom out, simply because in the perspective of years everything grows, but only we know what we have to endure, so simply every veteran, I think, will agree with me here. If you think so, thumbs up, subscribe to the channel. There will be more similar content. We will be going through these topics together and mentally preparing ourselves for what's coming, for both good times and bad. I plan to record a video on how cryptocurrencies can protect you from potential wars or political conflicts, so if you're interested, stay on the channel because it will be coming soon. Simply enduring all these turbulences along the way seriously requires so-called balls of steel. There was such a project. Someone asked me about it, but I don't know because it's some kind of meme. Because here we come to the key issues. The point is that trading is not always profitable. I simply mentioned this to you in the earlier parts of this video. Altcoins, shitcoins, coins, yes, they all just have a very short lifespan. They have a life cycle like a butterfly's cocoon. They soon die off and that's it. And especially in this cycle, we have experienced and will experience many more collapses of the largest number of projects in the history of so-called shell projects. Recently, I often made a comparison to the California gold rush. Gold rush of 1850 or some year around there. Crypto has always been a place where people have always wanted to get rich quickly, but ultimately it only succeeds for investors and traders. It's something new, uncharted territory. An unknown world offers earning opportunities, but only to the few who endure, persevere, and approach the subject wisely and strategically. Just like, for example, the Lewis Company during the gold rush, which instead of mining gold, made jeans didn't tear, so the guys had something to wear while mining gold. Not such a wise thing here. So unfortunately, in recent months after the creation of Pump Fan, which is also an analogy to that very Lewis from the California gold rush era, an illusion has emerged in the market that now anyone can become a millionaire overnight. You just need to catch on to one meme coin. Find that one project early enough that will give us 300 times 500. There were such situations. I myself bought some memes in this cycle that performed exceptionally well. In the previous cycle, I had 2 or 3 projects that did over X100. Okay, and of course, I didn't cash out everything at those levels, but part of it I held on to, so I've experienced a few projects in my life that did X100 cumulatively through these cycles, but it wasn't super easy and paved with roses. Most projects don't achieve such results. The best one I had did X350, which I held on to for a while and sold, part of it very high levels. But you've surely seen those posts on Twitter with stories about how a certain trader made millions from just a few dollars because they bought early enough on, for example, manga or another meme. Some random names like that, and those kinds of posts went viral. Everyone wanted to be next. Everyone was looking for the next meme with potential. But statistics clearly show that the vast majority of players lost money on Pump Fan tokens. And for me, the statistic that I have a smaller chance or greater than greater that I'll simply lose. No, that's enough. I prefer something else. And of course, Pump Fundex itself made money, meaning those who enabled the meme coin frenzy to last so long. It was exactly the same during the gold rush. And now the key question arises, which cryptocurrencies are worth holding or even to buy, and which are rather doomed to failure? If we are a guest in this meme and we press the hold button and we keep our unrealized losses, the question arises, should you average down losing positions or not? And averaging down is a double-edged sword, as we know. Especially in the crypto market, you have to do it wisely because not every coin deserves a second chance. It's a question you have to ask yourself subjectively. Work through on your own. Because in theory, averaging the purchase price can help improve the position and increase potential future profit, but it's not always a good idea because in many cases it can lead to greater losses and the trap of thinking that since you already lost so much, I'll buy more just to break even. And here, let's work through this question. When should you average out the loss? When it comes to Bitcoin and Ethereum, it's known that they have an established position in the market. Strong fundamentals also have a high probability of returning to new all-time highs in subsequent cycles. If the price of Bitcoin is significantly below its fair value, then averaging it out makes sense. And I think you'll agree with me that, for example, here's an indicator that shows this MVRV, the fair price of Bitcoin. You have it on the screen now, and it shows when the price is overvalued when it is not. So it is either fair or not fair. There are many such indicators, and indeed, when the price is unfair, when Bitcoin could be more expensive for a given period and all the surrounding circumstances and metrics, historical data, it's worth averaging it out. And indeed here, selling Bitcoin at a loss is like, I don't know, leaving a party at 10 p.m. Simply put, one of the key indicators that helps make such a decision is NUPL. That's what the ticker is called, and you have it in front of you on the screen, and this indicator measures whether investors are generally in profit or at a loss relative to their positions. The best moments for accumulation occur precisely when the majority of the market is underwater, meaning in a loss phase. History also shows that those who bought in panic when others were selling usually ended up doing the best in the long term. And you might say, wow, Eureka, Merrick, you've discovered America, that we shouldn't sell at a loss, that Bitcoin is worth averaging, but most people know that, of course, but simply. Alright, let's move on to altcoins. So, to give you a bit more substance here, because the situation is getting more complicated in this case, especially when it comes to smaller alts, or those microscopic projects, you have to be careful with excessive averaging, because you never know if after a big correction they will rise the knees. You know, I don't have such problems with averaging large, top altcoins with large capitalization because I know that sooner or later, if I do it regularly, for example, I add roughly the same amounts or add more during dips, which is advisable rather than buying during rises, then for example Ethereum, Solana, BNB, Avalanche or some related ones will come back. We also have interesting indicators, for example, right now just for Bitcoin. This token also has the MVRV, and this indicator shows us perfectly when. Most investors have unrealized losses on Ether and when the token itself is very undervalued. If you can manage to control negative emotions and use this type of indicators, you can effectively and wisely average your loss position on Ether using the available data. By the way, here I'll tell you how it looks now. The MVR indicator for Ether hasn't been this low since 2023, which indicates a huge undervaluation currently. From this point of view, if I had a loss on Ether, this is the perfect moment to average it out. So, what conclusions can be drawn from what I just said? First, averaging a loss is a strategy for well-thought-out investments, not for saving every position at all costs. Bitcoin and Ethereum are assets that have survived all cycles and are a safer choice than most altcoins. I have no issues with averaging top altcoins because fundamentally, cryptocurrencies hold ground. However, when it comes to smaller projects, you need to have good arguments to buy more instead of closing the loss and looking for opportunity elsewhere. Alright, but how does this look in my personal case? Because as you probably know, I made some rotations in my portfolio in July of last year. I focused then on the largest altcoins besides Bitcoin and Ether, also on meme coins, which actually paid off during that period. It was a mix of different tokens, but they had one common feature. All were from the top 100, not some really distant positions, which I didn't believe would give me a huge profit. And I know there's no such thing as too big to fail, because history shows that even giants like Luna or FTX can collapse in just a few days. However, there is still a much greater probability that these larger projects in the ranking, which I bought during the summer at the beginning of this year, will ultimately survive until the end of this cycle, and that they will experience another wave of growth. Or, for example, that one or two of them won't make it, but the rest will, which will compensate for the losses on those. We are not currently after a huge correction in altcoins. The tokens in my holdings are no exceptions. They have also taken a big hit over the last few weeks. However, I want to show you that these types of corrections are not unusual. Before we move on, you probably also know that the current correction is indeed painful for me as well, but still, I sold about 80% of my portfolio during the altcoin bull market from July to the end of November and early October. And I made purchases this year with those profits, so it's not such a tragedy for me, because the altcoins that are in the red come from profits generated from the previous quarter, which were significant, so I'm confident about the future of most of these tokens. It won't be bad, and take a look at how it looked. Ethereum, Chainlink, Dogecoin. In previous cycles, Ether in 2017 and 2021 had several really strong downturn periods. Link and Doge also experienced major corrections in 2020 and 2021 before they entered this last growth phase. And it's also about showing exactly these volatilities in these major tokens, altcoins, because it's known that it's best to buy at local lows. But even if someone bought at a local peak before the correction started or didn't catch that low, they ultimately ended up in the positive if they didn't sell at a loss during the downturns. Investing in crypto is generally risky. Of course, that's a fact, but we're all here because we believe that this risk will pay off, that it's acceptable, and we also believe that the coins in our portfolio will do well and make a profit. I personally believe that Bitcoin and most of the alts I hold will return, and in my opinion, when crypto is such a environment, it's better to be a buyer and hold strong tokens that haven't fundamentally lost value. Because of course, there are certain times when we shouldn't focus so much on the price of a given asset. And in my opinion, this is exactly that moment. We'll just see in a few months if I was right. Besides, in my opinion now, it's definitely too late. If someone is considering selling or shorting, it's probably the worst time. We've had those 6 to 7 weeks of pain, and the situation should slowly start to reverse soon, so we might still drop. Bitcoin definitely has a chance to drop to $74,000, Ether to $1,500. That can definitely happen. It would be the final market capitulation, which one must be prepared for and realize that it can occur because nothing is as simple as suddenly having growth after a correction. This might take a little while longer. The question is how much room for declines before a rebound, because in my opinion, we are at a point where a much better solution is to position oneself safely, reversing the trend. For example, let's say we have a 40% chance of dropping to 1,500 on Ethereum. Altcoins would then fall by another 30%, but we have a 60% or greater chance that within the next 3 to 6 months, those same altcoins will give us 50, 100, 150%. So, what is more profitable in this room if we compare? It's clear. The second option is that from this point, the bottom on alts is simply, I believe, close. I'm playing for that all the time, which is why I am now a buyer. If it drops a little more, it doesn't bother me. I might even consider adding some assets from outside, selling some gold or ETFs, and add to crypto, or I'll allocate some funds from the business to further build up this position. However, holding and buying loops and smaller coins at this moment is a different game. Yes, I'm also telling you bluntly and exactly what I'm doing. I'm not making any artificial purchases, not generating any funds out of nowhere just to lower prices on the table and then be able to say in 3 months, what kind of values are being twisted? Maybe I'll make another purchase. Maybe I'll sell something. If there was still a correction to $1,500, I would probably do it. But if it doesn't happen, then I won't buy anymore. I would simply hold off on averaging those less certain positions for now. Because here, when it comes to deposits, small projects, they can fall indefinitely. For example, Trump. I said that it might drop even to a few dollars. It dropped to 10. I think I said that when it was at 30, so it doesn't always work out, right? If Ether dropped to 1,500, then Trump would fall to a few dollars. Literally, probably. And indeed, some tokens that you have are on huge corrections of about 70, 80, 90%, but it's unknown which of them will survive and if at all. The further down the ranking, the correspondingly smaller the chance that a token will survive. And in my opinion, a better bet is to focus now on large caps, maybe mid caps with strong fundamentals, maybe catch some gems that are working hard during the bear market. If you can see from a project that it hasn't rested on its laurels, that they are making a lot of progress, that a lot is happening, that their events have cool implementations, then such a token is more likely to rise. If the tokenomics are favorable in the coming months than those that have taken it easy. In this material, I want to convey to you that there is no one universal strategy for managing your losing positions. Everything depends on your risk tolerance, because whether you can even fundamentally assess a project or whether you can control your emotions depend on you. Sometimes it's worth cutting losing positions, but I usually don't do that unless they are really small projects. At most, I prefer to let it go to waste because usually the proportions are tiny. Such purchases for me, I buy some low cap for 0.2% of the portfolio. If it doesn't work out, well, I'll just wait longer. I sometimes don't cut losing positions because it doesn't bother me. We'll come back into favor. Unless I see that it's a lost cause, then I sell it. I keep my crypto on spot, waiting for higher valuations. I don't buy anything blindly. I don't buy tokens just because someone recommended them to me or I read about them on Twitter. I first do my own research so that I don't worry later. When a correction comes, I want to know what I have in my portfolio. You also have to make decisions regarding your capital. I won't do it for you. I'm just the narrator. I tell stories, share my thoughts, my case studies, and what doesn't. And what about you? That's your business. You need to adapt it to yourselves. No one else will do it for you. And don't blissfully put yourself in someone else's hands, because that doesn't work. Simply at the end Q&A section. I've gathered your questions from YouTube, from Instagram. I'll answer them now. So the first question. Okay, Merrick, you say you don't sell. You say it will grow, but where does this certainty come from that it's still a bull market? That we're not in a bear market? Well, I'm not 100% sure. This is the market, you can't be sure of anything. But I speculate and assume, by analyzing the situation, that it's simply worth positioning for the most probable scenarios, which is that there's a greater chance. Simply for the fact that cryptocurrencies might drop another 20, 30%, and if not, what do I give a greater chance to? That altcoins will earn 100 to 200% in 3 months or 6 from the current levels. And that makes it enough for me. Merrick wiped me out on leverage. I lost money. I'm trying to recover the losses and enter the position again. Is this a good idea? Well, honestly, if you've lost once, twice on that leverage, then don't get into it. The same mess that caused you to lose money. It seems like a great idea because it was the easiest thing you could do, which is to play your roulette again. If you don't treat this professionally, that's usually how it looks. So if you're a beginner, don't start with leverage. Even experienced long-term investors often don't do this. Just assume that either you'll learn day trading, burn through a lot of funds, and then touch leverage or play long-term with gold. Because if you've lost funds, you absolutely shouldn't approach investing in this way, thinking you can quickly recover. Usually, it just has the opposite effect. And here's what you can do if you want to continue operating in the market. Choose 3 of the most reliable assets over the course of a few months or years. You will likely recover. Bitcoin and Ethereum. Hold on to some major altcoins. Buy more of one or the other using DCA and give yourself time. Just because you lost money in one day doesn't mean you'll recover it in one day. You will probably recover it in a year, and that's often the case, but the lessons are painful, which then make us simply make better decisions. Owen Zayed wrote he has 50% in his portfolio because he believed we were in a bull market. And now we're heading into a bear market, unfortunately. At least that's what he assumes, and I have to let it go. He's selling off at a loss. It will never bounce back. This is the end of the cryptocurrency market for me. Well, man, I sympathize. Of course, it's known that these are difficult emotions, but I often feel the same way. Having several tens of percent losses on individual altcoins. You can see on the screen now, I don't know, some PP that I bought, whether it broke. It's 50 to 70% down. I bought it in January. Well, it didn't work out because of the rest of the season. At this point, the decision is, of course, entirely up to you. What do you want to do about it? I described the investor's dilemma of whether to hold or sell in this video. So it's up to you which button you press, just like in this picture. I'm pressing the hold button and I think it will turn out a bit better. Oliwius Luzarzik wrote, Mark, what about Ethereum? Will there be any better forecasts? It's been quiet about it lately. I made a purchase since August last year. I'm holding the position, but what will happen? What will happen is unknown. Almost like from anxiety, but indeed, the fact is that I have Ethereum. It's the second largest cryptocurrency, the largest altcoin. I've invested a large part of my capital on it rebounding and doing well, so I don't assume it will suddenly go to waste just because there's a negative narrative. Look, Ether dropped by 50% and Tesla dropped by over 50%, so one of the largest companies in the world fell as much as Ethereum, which doesn't mean that both will collapse. We'll see in 3 months or 6 where each of them will be. We can come back to this comment and check whether it will be higher or lower. I assume it will be the first option. Yakub asks, what to do if I'm at minus 50% and still have funds to invest? You're in a comfortable situation because you still have funds, so it's great that you've arranged it this way. Of course, it's better to assume that for mistakes, decisions are made with personal responsibility. I won't tell you what to buy now because you might listen to this in a week or a month. It will be outdated, so I couldn't give such personalized advice. I also can't provide it due to various regulations, but I can put myself in your shoes and imagine what I would do if I were in that situation. I have a 50% loss, but I lost it on something fundamentally good, for example, on some Link or Ondo. I would try, if you have the means, to buy more for the same amount as before. Then you will be at a much smaller loss and simply wait for the token to bounce back. So I invested $1,000 in Jupiter at $1. The price dropped to 50 cents. I had another 1,000. I have a 75% entry at 50 cents. To reach 75, I only need 50% more, and it's not impossible to recover, and there sooner or later it will work out. Roddick writes, make a video on how to come out ahead with high probability. Well, it's not some super complicated plan. It's not something that would make me record a 4-hour video. How to buy Ethereum and hold it for half a year. But I would simply average in buying more and more, especially now. Look at the moment we have, an extremely undervalued token. This is shown by the new MVRV indicator. Look at the chart a few slides back. Just like that. It's always worth having some stable coins to add during dips. Never go all in with the entire amount, because usually we buy when it's expensive and then we have nothing left to buy back with. Tokens, so I know it's tempting. It's nice to have market exposure right away, but it's not always the best idea and it doesn't always work. So I will sell, among other things. Ether, for example, when the MVRV is at a level of 2 or 3. This will mean that according to this indicator, we will be high. This is just one of the metrics I will be relying on. Adam Gribowicz writes, Mars, do you think it will surpass the all-time high there? Where you showed the graphic, it seems you don't have much of it left. Adam writes that it's the main altcoin in his portfolio, but it's his first cycle and if he knew what he knows now, he would have taken profits in December and not re-entered. Of course, now everyone thinks that way and would like to have cashed out in crypto earlier, by the end of this year, but it wasn't done, so it's a bit, honestly, unwise. The decision that this is your only main altcoin, because it's quite a distant position. It's known it will likely survive there, but it's already another niche, a branch of the crypto market. It's better to bet on the biggest altcoins on Ethereum, because that's at least 115. Secondly, another response. Yes, I believe it will surpass its high. I'm counting on it. It's a bit short, but those several 100% sooner or later believe will be achievable. Especially since we've already had large unlocks, some supply has been released. We have room to recover losses. Pauloism wrote that I averaged Kaya nicely, saying good job. Well, it wasn't a particularly difficult case, because I bought it 3 times, so I believe that if Kaya rebounds by 20% or so, I'll be in the positive. And this is a token comparable to TON. Look at how much TON has increased in value today. We had a surge of about 50 to 60% during the correction, but the point is that probably Kaya might follow it as something that is an equivalent just from the Asian market. So even a small arm on Kaya with leverage of 2 or 3 times wouldn't be a bad idea. Marilyn Manson asks Merrick, do you think it's worth investing in Solana to all-time high? That's just 100%, meaning a 50% drop. A lot, just like that. I think sometimes greed needs to be controlled. A 100% profit is an outstanding result, not just even in the cryptocurrency market current cycle. If the crypto bull market were to last until the end of this year, then no asset in the traditional market would give you a 100% return, especially when it comes to ETFs, which are funds that aggregate dozens or hundreds of different tickers from various companies, but individual stocks might. Worth buying Solana. It's also shown on the VRV chart. It shows that it is very undervalued, also because that pump really mixed things up, and currently, I don't have much faith in Solana. I don't think it will give me huge returns. I've already partially sold. For example, you have info on the screen from Telegram when I was selling ANA for $270. I think the rest will still make some gains, but I'm not counting on a few 100% in this cycle. I think Ether will do better than Solana. So listen, that's all for now. The video turned out a bit long as always, but I wanted to cover all the topics and just tell you what's what. So without further ado, subscribe, thumbs up, links in the description, take care, and write in the comments what you want. The next material. For now, bye.